Hey, it's your man chollyP. Today, angel dust is on the menu. PCP is on the menu. Now, for anybody who's been subscribed to my channel for some time, you know historically angel dust has kind of been my favorite setup to see. It was the setup that I used to make my first 5 figures. Me and angel dust go way back. That's my baby. That's the first setup that I recognized where I was like, dude, I see something that's like finally my own strategy that nobody's ever, taught it this way or seen it this way. And then that took me down a rabbit hole to find another strategy, or other patterns, I should call them, other candle patterns around certain moving averages. Cause that's really how I trade. I find candle patterns around moving averages. That's legit what I do. But anyway, I've got some updates to the angel dust strategy that I'm excited to show today because it's going to allow us to catch more setups than we used to. One rule in particular you'll find is a lot more lenient, and that's going to allow us to catch some more setups, because I was trying to figure out, why am I not seeing angel dust nearly as much as I used to? So I went down a back testing rabbit hole, and I think I figured it out. So let's talk about it today. The first example that we're actually going to look at just happened yesterday on the GBP CAD. We're going to look right here in this boxed area. And so the first rule of angel dust is that you're going to trade in the direction of whatever side of the 144 EMA you're on. So the 144 moving average is the purple line. So if we're above the purple line, if our formation is above the purple line, we're only looking to buy if we see angel dust. Likewise, if our formation happens below the purple line, then we would only be looking to sell. For the sake of saving just a little bit of time, I'm not going to repeat that rule on all the examples. This is the only example I'm going to say that rule on, because it's very straightforward. Okay, so we're above the purple line, we're buying. If we are below the purple line, we are selling. So once again, super straightforward rules. So let's stick to rules 2 through 5 for the remainder of the video. All right, so the next rule, we want H1 to be coasting along the 10 EMA, that's my white line, while at the same time, the Ehlers Fisher, that's the bold green line down here at the bottom, is below the 50 level. So we've got a 90 level, a 50 level, and a 10 level down here. We're only concerned about the middle line, that 50 level. So if we're buying and the H1 candles are coasting along that 10 EMA, you want this to dip down below the 50. Once you see that, you want to start looking for angel dust. Well, how do we do that? We look for PCP. PCP is, of course, peak center pass. That's just our way of looking for an M or a W in the market. Since we're buying on this example, we're looking for a W shape. So our peak is going to be the top of that W shape. It comes down up into the middle. That's our center point, down, and then it completes the W, which is going to be a pass candle. So peak, center, pass. All right. Now, we're always going to draw a line on top of our center point just to make sure that we can more easily recognize our past candle. So when price is up like this and it comes down, goes up and down again, when it's down here, that's when I would mark what I think might become a center point, which I don't know it's a center point until the past candle happens. But once we get that past candle, which means the price has, which means H1 has come up and closed past our center point, at that point, we effectively have PCP. But one thing to keep in mind, and it's extremely important that you pay attention to this, when the past candle happens, the Ehlers Fisher still has to be below the 50 level if you're buying. So I'm going to take my crosshair and I'm going to put the crosshair right on top of that past candle. Now look down there at the Ehlers Fisher. You see it's still below the 50 level down there when that past candle closed. That's what I mean. That has to still be down there. If it was already above the 50 level, it wouldn't count. That's an invalid setup if that's the case. But We are good to go on this one. The next rule says the past candle forms within the following range. This is a major change to my strategy, because before there were some specific times, which granted this is still a specific range of time, but it's a much more lenient range of time than what I had before, because after tons of back testing, I found that as long as it's within this range, then we're good. When I first came up with this strategy, there were other things that were going on, such as how I was saying that Ehlers Fisher still has to be under the 50 when the past candle happens. That's something I didn't know yet. So there was a lot of things that I hadn't realized yet when I first made this strategy. And now it's allowed me to tweak it to make it a little bit, it'll allow us to catch more of them. So we can catch more angel dust, take less L's. But anyway, back to the rule here. So what time did this candle happen? Let's make sure that this is within the proper range of time. So I'm going to grab that crosshair again, put it back above that candle again. And if you look down at the bottom, you see that this happened at 13 chart time, which will be equivalent to 5 a.m. in the morning, my time, or Central Standard Time rather. So if you look on the rule sheet, it says anytime between 1 a.m. and 9 a.m. Central Standard Time. Convert that to whatever time zone you're in. I'm in Central Standard Time, so that's what I'm going off of. Or I put the chart times as well, 9 to 17 chart time. And chart time is how I was just saying, like if you look at that crosshair and you look down there and it says 13 chart time, that's just how the chart times go. But 13 equates to 5 in the morning for where I'm at, Central Standard Time. So do whichever conversion you want to do, or go by whichever one you want to go by, but it needs to be within that range of time. Basically, it needs to be within sometime between the beginning of London session up until the beginning part of New York session. Anywhere within that range is essentially what we're looking at. But that is, if you have all those rules, then PCP is established. At that point, all you want to do is go to the 15-minute time frame. You want to go and wait on price to come back down and grab the 50 EMA. Now, once price comes down and grabs that 50 EMA, then you enter that trade, and you could have called on this one that same day about 50 pips, or you could have held that into today and caught over 100 pips on this trade. I think just over 100 pips, if I'm not mistaken. Yeah, a little bit over 100 pips this trade went. Now, as you see, there's a sub note under that where it says enter when M15 grabs the 50 EMA. And the sub note says the projected entry can't be in the H4 bands. All I mean when I say that is before you take an entry, if you go to the H4 chart, or the H4 time frame rather, and clearly this one's nowhere near being in the bands, but let's just say when you went in the H4, let's say we were looking up here somewhere, and when you were about to take the entry, when you got on H4, price was like right here in the middle of the bands or just inside the bands. At that point, leave that mess alone. But as long as it's not in the H4 bands, then you're still good to go. This one was clearly way away. This was nowhere close to the H4 band. So we were good on that one. And that's all that rule means. And I'm not going to repeat that one either. So I know I spent a lot of time on the first example. I'm going to speed through the next few examples, and then I'm going to show you a few examples of angel dust, or what look to be angel dust setups, but they're actually invalid, and you would want to bypass taking those trades. So definitely stick around for those. But let's look at 2, maybe 3 more examples, and then we will look at those invalid examples after that. All right, so here's another good angel dust setup. This one happened on the Euro JPY. Here's our setup right here. We're looking in this boxed area. So we have price coasting along the 10 EMA. At the same time, the Ehlers Fisher dips below the 50 level. Cool. We have this is peak, comes down up into a center point. Let's draw a line at the top of our center point candle body. Bam. And then comes down, and then it goes up and makes a pass candle. This candle closed just barely past our center point, but it did close past that center point. And now let's take our crosshair and check 2 things. We're going to check, 1, is the Ehlers Fisher still below the 50 level down there at the bottom of the page when that pass candle closed? Yep. So we're good on that. Also, what time did our past candle happen? It happened at 10 o'clock chart time. So that's going to be 2 o'clock in the morning. That is within our valid range, or within our acceptable range of past candle times. So angel dust is met. All we got to do now is take the trade or wait on the entry. So let's go to the 15-minute time frame. Scroll back over where we were, and we wait on price to come back down and grab our 50 EMA. So we're going to enter the trade right here under the 50 EMA. Bam, enter. And that same day, you could have caught upwards of about 70 pips, or held that into the next day and caught upwards of about 160 pips. Great trade. Let's look at another one. All right, here we are on the Euro USD. We've got price hovering along, or coasting along the 10 EMA. At the same time, the Ehlers Fisher is under the 50 level. It's in and out, but the main thing is that we want it under the 50 level when the past candle happens. But we've got our peak, comes down up into a center point. Let's draw a line there on the center point, the top of the candle body. Oops. And then it comes down again and it comes up. Now, glad I showed this example. Check this out. I'm gonna zoom in a little bit for this one so we can see what's going on. All right, now that I've zoomed in, you can kind of see that the past candle did close above the center point. So that's why it's very important that you draw your line perfectly at the top or the bottom, if depending on if you're buying or selling, of your center point candle body, not the wick, but the body. This is barely closed above it, but it did. But let's say for some reason you just couldn't tell. What you can do, you can move that line out the way and hover your mouse over the top where that candle closed, so you can see the prices. And you want to focus on the close price. So in this situation, the close price, that's the second one from the bottom. It says 1.08463. Then you find your what you think is the past candle and look at that close price, 1.08464. The other one was 463. This one ends in 464. So 1 micro pip higher than our center point. All right. So that still tells us, yes, this is a valid past candle. But first we need to check a couple of things. One, we need to make sure that Ehlers Fisher is still below the 50 level. So, well, that's the thing. The Ehlers Fisher repaints, but let me scroll over because it was below the 50 level when it happened. If I scroll over, it'll change how the Ehlers Fisher looks. There we go. And that's more so where it was when the candle actually painted in real time. So the Ehlers Fisher was below the 50 level when that candle passed. And also we can see it happened at 9 o'clock chart time, which is at the very beginning of our acceptable past candle time. So everything is met. Now we just go down to the 15-minute time frame and we wait on the entry. So let me scroll back over where we were. All right, so here we are. And so price came up, it shot back down under our 50 EMA. So we entered the trade here in this area on this red candle once it grabs the 50. So we enter somewhere along these lines. You have a good amount of drawdown, but it's not terrible, about 13 pips, but that's enough to scare you a little bit like crap. But then as you see, it goes in your favor and you can have upwards of almost a 90 pip day, depending on where you get in. So that is a good setup. Okay, here's one more buy setup, and then I need to find some sell setups, man. All these are buys. But here's one more setup right here in this area. We've got price hovering along that 10 EMA. Ehlers Fisher is below the 50 level. Here's your peak, comes down, it comes up to a center point. Let's draw a line at the top of our center point, comes down. Here's a past candle because it closed past our center point. Let's see what time that past candle happened and make sure it's under the 50 level. So it's still under the 50 level down there on the Ehlers Fisher when that past candle closed. Cool. Also, the past candle happened at, oops, I didn't jacked up. The past candle happened at 12 o'clock chart time. That's 4 a.m. in the morning Central Standard Time. That's within our acceptable range of time. Cool. All we got to do now, go down to the 15-minute time frame. You wait on price to come down, grab the 50 EMA. You get in the trade under the 50 EMA on the 15-minute time frame. You ride that out. That's over 100 pip day. Okay, so now that we've looked at a few examples of valid setups, I want you to see a couple of invalid setups, because there's something about the center point. When we're talking about peak center pass, there's something about the center point that's very specific that you need to know. It will save you from taking some L's. Okay, so the first example we're going to look at is on GBP CAD. We're going to be looking right here in this area. You know what, matter of fact, let me actually illustrate something for you first. I'm gonna draw this out first. Now, your center point has to look a specific way. So you're looking for kind of one or two things. Since we're looking at a sell example first, your center point needs to look kind of like this. You're gonna have like if it's a bearish one, you either want two obvious bearish candles, and then let's see, before that happened, you would have like a green candle or whatever, and then price might come back up, look like that. Like that's a good looking bearish center point. Or it can look like this. You got your bearish candle followed by, or I'm sorry, before that bearish candle, maybe you got that, and then it comes back like that, or like something like that, or just something along those lines. These would be two good center points. This right here could even be like this. I'm sorry to confuse you. It'll make sense in just a moment when I show the other stuff. So like these would be two acceptable center points. The center point either has to have two candles going in the direction that you want to trade in, two consecutive candles in the direction you want to trade in, or it can have one candle going that way, but the candle that's before it in the opposite direction can't be more than like a quarter of the size. What I mean by that is if you have, so you got another, this will be an invalid example I'm about to show. If the candle in the opposite direction before that other candle is more than like a quarter of the size of that candle, I ain't gonna say more than a quarter. If it's a quarter or more of the size of the next candle, then that's not valid. So this, let me finish that formation out completely. So this right here, because this is a bullish candle, and this bullish candle is taking up more than 25%, or 25% or more of this candle, then versus like this one, that's only like 10% of this candle. So that's okay. Let me show you now on the chart what that looks like. So in this situation, this center point, because really we have peak, here's our what kind of looks like the center point right here, and pass. Now just eyeballing this based on what we just talked about on our illustration, saying you either need two obvious consecutive candles or one obvious one, but the candle that comes before it needs to be less than 25% of the size of it. As far like if it's an opposite direction candle. So this one, we don't have two obvious candles. Like I can't eyeball that and just be like, oh, this is another bearish candle. I would have to either try to zoom in, and even zooming in, I still don't know what's going on. I can zoom in some more. I still don't know what this is. So that to me is not two obvious candles, which makes that center point for me invalid. I don't want to have to be zooming in and all that. I want to be able to just look at it, eyeball it, and be like, oh, okay, that's two bearish candles. Cool. So when that came down and this made a quote unquote pass candle, we see that didn't end up working out. Let's look at another example of an invalid center point. So looking here on the Euro CAD, right here in this area, everything else is going to meet. You got price coasting along the 10 EMA. Ehlers Fisher came above the 50 level. You got your peak, comes up, comes down, and makes what looks like a center point. So we draw a line here. There's their past candle and all that stuff. But look at the center point. This candle that came before this one, that's at least 25% of the size of this one. And it's because it's in the opposite direction. This is a bullish candle. That's a bearish candle. If the bullish candle that comes before the bearish candle is 25% or more of that size, leave it alone. Unless this would have been a 2 candle formation. Like if this would have been bearish followed by another obvious bearish candle, then you're fine. But if it's just one bearish candle and then it comes down, back up like that, this can't be 25% or more than the size of that bearish candle. So that's not a valid center point. Now let's go back and look at a valid example that's going to help this make a little bit more sense. So we're looking right here on the USD JPY. All I'm going to do is focus on PCP on this example. All the other rules are met. Just so we're clear though. All right, so on this one, you got your peak here. It comes down and up, goes down again. So initially I would actually look at this like a center point because that's not 25% as tall as this candle, even though it comes right back down. So I'm like, cool. So I'm gonna make this my center point at first. Then this comes down, up, down. Well, this looks like another center point, and this, you could kind of say, oh, that might be a pass candle, but it didn't happen in the right time of day to be a valid pass candle. So when it comes back down, I'm adjusting this to now my most recent center point. You want the center point to be like whatever is most recent, pretty much. It goes down and it comes up again, and then eventually we get a pass candle. But here's what I'm talking about. So notice this bearish red candle right here is not 25% as much as this one. It's about maybe 15 to 20%, something like that. You kind of, but I can tell 4 of these stacked on top of each other is not going to be as tall as this right here. So that is a valid center point. That's, if I go back to my Microsoft Paint, that's more along what this middle example looks like, where I was like, that's a valid center point because this candle isn't 25% or more the size of the candle that, you know, we're looking at as our center point. This right here is an invalid example. This is more than 25%. So that wouldn't work. This right here works. And this right here in the middle is what we see essentially right here, just in a buy example. All right. So everything else works. You go down to the 15-minute time frame. You wait on price to come back and grab your 50 EMA. It gave you a couple of chances. I wouldn't have traded this because that's just too early in the morning for me. I would have caught it right here and gotten a trade. That's over 100 pips in a day. Let's look at a couple more examples and then I will close the video out. All right, we're on the Euro USD again. We're going to look right here in this area. You got price coasting along the 10 EMA. At the same time, our Elis Fisher dipped down below the 50. So we kind of start looking. You got your peak here, comes down, up. This would be our center point at the top of this candle. Now notice you've got green, green, then the doji. So this one isn't really, I can't tell if that's a bullish or a bearish one, but what I can tell is we got 2 green candles right before it, and it does come up into a point and comes down at that time, or actually even better. So check this out. We'll do the same thing we did on the last one. It comes back down again up here. Here's another one too. You can actually adjust your center point and say, actually, this right here is the most recent center point. Comes down. Here's a pass candle. What time did that pass candle happen? That happened at 11 o'clock chart. Let me pull this over a little bit more. That happened at 11 o'clock chart time. So that's within the acceptable range of times. And then also the Elis Fisher was still below the 50 level. So everything is met. Angel Dust is a valid Angel Dust setup. Let's go down to the 15-minute time frame and price. We just wait on it to come down and grab the 50 EMA, which it did here. You enter that trade and you could have had another So that's about a 70 pip day. So still a good trade or whatever. And let's look at one more example and then I'll close this thing out. Here we are on the GBP JPY. You have price coasting along the 10 EMA here. As it's coasting along the 10 EMA, you have the Eilish Fisher dip down below the 50 level. Cool. You have price making, I don't really like this as a peak because it's too, I don't know, that's just really curvy and stuff, but it can still work. I actually, in this situation, would use this as a peak just cause. So I would say peak, and it just does a bunch of curving. This is still going to be my center point. Now take a look at that bearish candle right before this center point. Is that 25% or more of the size of this candle? That's not 25%. So that's still a valid center point. It comes down. Then we get a pass candle here. Let's make sure our Eilish Fisher is still below the 50 level here. Yep. And then also the time that candle happened, that was at 11 o'clock chart time. So that's within the acceptable range of times. So all we do at this point, because angel dust is confirmed, the setup is confirmed. Now we just wait on an entry. Now, clearly this was some news right here. But that is before I would have even been getting in the market, because for New York session, 7 a.m. Central Standard Time is the earliest that I'll take a trade. This happened during the 6 o'clock in the morning hour. So I actually would have gotten in the trade either on this candle or this one, because those are in the 7 o'clock ones, I can tell. Yeah, so this is when the 7 o'clock hour started right here. So I likely would have hopped in the trade right when it grabbed the 50 EMA here. Boom. And then for that day, we're looking at about 130 pips if you hold that towards the end of that day, but definitely over 100 pip trade on that setup. Okay, so with that said, I'm going to go ahead and close this video out. Put your questions in the comments. I know that center point rule might be confusing, but just take a few more looks at that section of the video, I guess, and try to let that sink in. But I tried to be as thorough as possible with that explanation. So sorry for the long video, but not sorry, because I had to explain what I had to explain. So it is what it is. But I will holler at y'all on the next one.